absolutely horrendous. They missed consensus by like $1.5 billion. That is unheard of.
Clearly, we didn't meet our expectations nor our shareholders' expectations.
It's much worse than I think people would have thought. This is the worst data center result that we've seen so far in the industry, and certainly the worst that I've ever seen in Intel's. There's nothing to like here, at least in the numbers. Nothing.
This is the bottom. We're rebuilding from here.
Intel is in serious trouble. I don't just mean the stock, even though it collapsed by over 50% year to date with no signs of stopping. I actually mean the company itself, which has been trying to catch up to their competition for years, only to fall further and further behind. At their most recent Innovation Day, Intel announced their most aggressive processor roadmap yet.
Normally takes 2 years for a node. We're going to do 5 and 4 years. Are these Intel folks crazy?
Yup, promising 10 years worth of progress in just 4 years does sound pretty crazy, and in this episode, I'll show you just how crazy this plan could be and why betting big on Intel right now might be even crazier. Your time is valuable, so let's get right into it. First things first, I want to make it clear that I'm not rooting for Intel to fail. I really do want them to succeed. Intel represents one of the best ways for the West to secure their chip supplies and provide some much needed, healthy competition when it comes to semiconductor production. But the truth is that Intel has been struggling for years now, and whether or not you already knew that, it's important to understand just how bad Intel's current performance really is. So to get us all on the same page without wasting your time, here's the best clip I've seen covering Intel's most recent earnings. Buckle up, this clip is a wild ride.
Now we ask the top-ranked semi-analyst Stacy Rasgon of Bernstein what to do with shares now as you see them plunging. I can't believe you're smiling because of these results.
Ouch. Yeah, there's people knew it was going to be bad, but I don't think people thought it was going to be this bad. This is an ugly, ugly print. PCs are weak. We knew that, but I'd say in their numbers, it's much worse than I think people would have thought, given even the weakness we're seeing in that market. My guess is they're probably dealing with channel inventories as well as weak demand. Data center looks absolutely horrendous. And this is the thing that's really getting me beyond just PCs are weak. Data center revenues were down 16% year over year. They missed consensus by like $1.5 billion. The operating profit in data center was down 90% year over year. It printed a 5% operating margin. That is unheard of. The company's got gross margins now. They plunged through the 50% level. They're running in the mid 40s now. They're looking for under 50% for the full year. Like I said, ugly, ugly print. There's nothing to like here, at least in the numbers. Nothing.
Well, I mean, is this environment or execution or both?
Well, they're blaming, I guess to their credit in print, they're blaming both, and it is both. We've been of the view, at least on the PC front, that not only have been over-earning in a strong market, we think they've been over-shipping, and so I think that's correcting. What I don't understand right now is that data center number, because we've had a lot of other reports from folks in like that supply chain, and people have been worried that data centers rolling over. Everybody else seems fine. This is the worst data center result that we've seen so far in the industry, and certainly the worst that I've ever seen in Intel's, at least in my history of covering the company, which was almost 15 years.
Data center revs down 16%. The company's Pat Gelsinger saying, quote, this quarter's results were below the standard we have set for the company and our shareholders. We must and will do better. The question to you is, how do they do better if it's as bad as you just said?
I mean, they're looking for a little bit of a rebound into Q4. You can kind of back into the Q4 guidance because they gave the full year in Q3. They're guiding about 79 cents in Q4, still below the street, but it's a rebound. So we'll have to see how that looks. And then we'll see what things look like going forward. But I think people have to remember, Intel's on a multi-year transition, a multi-year journey. It's just barely getting started. This is just the beginning of it. So I don't know what this looks like as we go forward. I think the one thing, if you were looking for any sort of silver lining, and look, people were hoping that they would kitchen sink it. So maybe this is a kitchen sink. Maybe that's the hope. But I mean, it also feels like it could be going down the drain. Like, I don't know. Like, this is, it's not so good.
It feels like they've already thrown the oven and the refrigerator into the pile, and now they're supposed to kitchen sink it after everybody kind of knew what the challenges were. But let me ask you this. The passage of the CHIPS Act, is it meaningful to the bottom line?
Well, yes and no. So they've got plans to build, and without the subsidies, those plans will cost more. But in order to get this, remember, they're not just getting dollars and then putting it on their balance sheet and then buying back stock with. They actually have to put those dollars into the ground to get it. So they need to build those facilities. Results like this, you got to wonder: do they actually need them? Right? I don't know yet. They did cut their capex, by the way, this year. So what sort of brings those longer term plans into question as well, I think.
I really appreciate that CNBC interview with Stacy Raskin because it doesn't pull any punches, and it highlights the full extent of Intel's problems in both the PC and data center markets. It also explains why the CHIPS Act doesn't just magically save them over the long term, since Intel would still need to pour tens of billions of dollars of their own money into building those new fabs. Also, Stacy is asking the right question, which is whether or not Intel really needs 2 more fabs in the first place, given how much demand has dropped for their chips. Think about it, their income after operational expenses in the PC market is down by 73% year over year. These numbers are so bad, I had to double check that he wasn't misspeaking. Even worse, their operating income from data centers is down by 90%. 9-0. Intel is losing a lot of ground in data centers to AMD, whose share of data center CPUs has more than doubled from 10% in 2020 to 22% this year. That's a huge problem for Intel and one they need to fix pretty quickly. So this has to be rock bottom, right?
Clearly, we didn't meet our expectations nor our shareholders' expectations. This is the bottom. We're rebuilding from here.
Let me explain why Intel's comeback may not go as smoothly as shareholders and Intel's own management might hope. This is a graph of the year-over-year change in PC shipments since 2015. It's safe to say that the global PC market has not been growing very fast. It went from shrinking by 10% per year in 2015 to growing by 5% per year in 2019. Then PC shipments skyrocketed during the pandemic, going up by 59% year over year. The PC market grew like wildfire for 7 quarters in a row, as millions of people began working from home and doing more things online instead of in person, like shopping, watching movies, and connecting with friends. And I do think that, on average, people will keep doing these things online more often than they did before the pandemic. But what they won't be doing more often is upgrading their computers. If you're somebody who uses a computer for basic tasks like browsing the internet, checking your email, or streaming video, you can probably go almost a decade between upgrades at this point because these chips are getting so good. That definitely includes the newest chip that Intel showed off at their last Innovation Day.
Today, I am thrilled to reveal the 13th gen Intel Core desktop processor family. Formerly known as Raptor Lake, the flagship i9-13900K is coming next month. This is the fastest, best desktop processor ever built in history. It has blazing clock speeds of up to 5.8 gigahertz, and the i3-13900K is the best gaming, streaming, and recording experience ever.
The Intel Core i9-13900K honestly looks awesome, especially as somebody who records, edits, and renders tons of videos just like this one. And it's even cheaper than AMD's current chips. I really do want one, but the problem is I just don't need it because I upgraded during the pandemic and my computer still runs great. So guess what I'm gonna do? I'm gonna wait for a huge holiday sale, which will further eat into Intel's margins, just like everyone else with a computer that already works fine. Here's the thing, Intel knows this too. That's why they're getting ready to lay off thousands of people in the face of steep demand declines for PC processors, which are its main business today. Analysts are predicting a revenue drop of about 15% for this quarter, thanks to shrinking sales and margins. So with that in mind, why are they spending another $20 billion to build 2 new chip fabrication plants at all? Even if the CHIPS Act helps pay for some of them, who are they expecting to buy all of these extra processors that they're ramping up to make? But Intel's plan is even crazier than it seems. Remember this?
Normally takes 2 years for a node. We're going to do 5 and 4 years. Are these Intel folks crazy? No, we are just torridly moving to the future. And our 18A, right, the key one where we'll assert as unquestioned leadership, the PDK 0.3 is in the hands of developers today, and we expect our first test chip taped out against that before the end of the year. We will not rest until the periodic table is exhausted. We will continue to be the stewards of Moore's Law into the future. You got it? Alive and well.
When Intel's CEO talks about nodes, he's talking about their chip manufacturing processes. The smaller the node, the more transistors a manufacturer can fit onto a single chip. Today's chips don't really have transistors that are 10 nanometers or 7 nanometers in size, like these process node names imply. Instead, they're more like marketing terms that mark big advances in chip manufacturing technology. So what he's really saying here is that Intel is planning to make 5 big advances in the way they manufacture chips over the next 4 years, with the 5th one finally putting them ahead of competing chip makers like TSMC and Samsung. Likewise, if Intel has to delay a new process node at any point in this very aggressive schedule, they'll stay behind their competition for even longer. The thing is, this is exactly where Intel has had the most trouble in the past. Intel's 10nm chips were initially promised back in 2016, but they didn't come out until the middle of 2019. The delay was so bad that Apple, who was one of Intel's biggest clients at the time, ended up dropping Intel to design their own chips and have them made by TSMC. But Apple switching chip makers did more than just lose Intel a valuable customer. It showed the world that Intel's chips just weren't cutting it. Likewise, Intel's Meteor Lake chips were supposed to come out in 2020, but they got delayed until 2023 thanks to a defect mode that they identified in their 7nm process. Each node plays a key role in Intel's strategy of getting their production back in line with their competition. So when Pat Gelsinger says it takes 2 years to get a new node up and running, what he really means is that's how long it takes TSMC and Samsung to do it. For example, TSMC's 20nm process ramped up in 2014. Their 16nm process came online 1 year later, and their 14nm process came online 1 year after that, followed by their 7nm process 2 years later, their 5nm process 2 years after that, and they just delayed their 3nm production, so it'll end up coming out about 3 years after their current main process. So the math ends up checking out. TSMC averaged about 2 years per node for their last 5 nodes. But there's another trend that's also becoming pretty clear. The more advanced the process node, the harder it is to ramp it up to full-scale production, so the more time it should reasonably take. After all, these are some of the most complex processes in the world. Pat Gelsinger plans to do 5 nodes in 4 years.
We're going to do 5 in 4 years. Are these Intel folks crazy?
5 in 4 years. That's about 1 node every 10 months. Here's the thing, Pat Gelsinger isn't the CEO of TSMC. He's the CEO of Intel. So here's how long it took Intel to execute on their last 5 process nodes. Intel's 45nm process ramped up in 2007. Their 32nm process ramped up in 2009, so 2 years later. Then their 22nm process came out 2 years after that, 14nm came out 3 years later, and 10nm came out 4 years after that. Finally, 7nm will come out a full 4 years after 10. So Intel's last 5 nodes actually took them 15 years, or 3 years on average, not 2. And just like with TSMC, their most recent process nodes took even longer. For Intel, 4 years each, much longer than the ones that came before. Now they're just going to ramp up 5 even more advanced nodes in just 4 years? Alright, now we've come full circle. Hopefully this episode helped you understand the extent of Intel's current situation. Investing $20 billion into new US-based chip factories sounds great on the surface, but even with the CHIPS Act, it'll be many years before these investments start producing chips at scale and paying themselves off. And that's if there's this extra demand for processors in the first place, which I'm not totally convinced there will be, at least on the consumer PC side of things. And on the data center side, Intel is losing a lot of ground to AMD every year. Hopefully, we'll learn more about why Intel thinks that's happening during their next earnings call. Intel's competition isn't exactly standing still on the manufacturing side of things either. Samsung has plans to invest almost $200 billion on new US-based fabs over the next 20 years, and TSMC plans to spend $100 billion in just the next 3 years alone. So we'll see if Intel's crazy plan is enough to catch up, even if they can pull it off without any hiccups. If Intel can really make 10 years worth of advancements in just 4 and catch up to other chip makers, I think it would be one of the biggest comeback stories in market history. And in the end, I am rooting for them, but I wouldn't invest in Intel just yet, because there's one company that could end up crushing them in almost every market. And if you want to know how, check out this episode next. And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That lets me know to share more research like this. Either way, thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.